Hey guys, Ben here. Let's talk UK stocks. Now I know I'm from the UK, but I always talk about US stocks, and there is a major reason for this. I recently did a video on why I sold my entire stake in the FTSE 100, and that was mainly due to the companies in that fund being slow growing bank and oil stock. But there are a few special companies in the UK which I do like and are extremely interesting. I've got a whole playlist on those, so I'll leave that in the description below. But in this video, I'm going to be discussing a recent IPO, a Manchester-based company, a Manchester-based e-commerce and tech company called the Hut Group, ticker symbol THG. This is an extremely interesting company. They own major e-commerce brands such as myprotein.com, where you can purchase protein shake, protein powder, etc. Exceptional brand, exceptional marketing. They also have many other verticals to this industry. So in this video, I'm going to do a real deep dive into the company. This is not going to be one of those hype videos which you see on many channels these days. This is going to be a real deep dive into the company. I'm going to look at the business model, I'm going to look at the juicy financials, I'm going to look at the management, and I'm also going to do a full valuation for this company. Now, the reason I'm doing this is this could be a potential opportunity, because although I do like US stocks, many of those can be massively overvalued. The UK stock market is just so overlooked, so we can find hidden gems in this market. But before we dive into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. If you wish to take things one step further, first link in the description below to be taken to the Patreon page where you can check out the VIP membership group. There you can gain access to my buy and sell signals, so when I make my moves, you can make your moves, in addition to my entire investment portfolio. But with that being said, let's dive in. Okay, so to kick things off with this stock, the Hut Group, I'm going to play the promotional video from their investor relations page. Now, bear in mind, this is an extremely well done marketing video, but still it should help to give you guys an overview of the business. Ready? Go. Okay, so that's an overview of the business. Now let's dive in a little deeper. Headline here, the Hut Group raised 1.88 billion in a huge UK flotation as firm begins trading on the London Stock Exchange. Now, I believe this is one of the UK's biggest IPOs. So the founder of the Hut Group is Matthew Moulding, a former pub dishwasher turned into a billionaire and resulting in scores of his employees also becoming millionaires. Now, I've actually done a little bit more digging, and this guy is a really switched on guy. He's not just a former pub dishwasher, which there's nothing wrong with, but he studied industrial economics at the University of Nottingham, and he's a chartered accountant. So this guy is very switched on, and he does know his numbers, which is great news if he's running the business. So in 2004, he founded the Hut Group selling CDs online, and then upon the launch of the iPhone and the music streaming service, he shifted his focus to selling other products online and acquired a number of e-commerce businesses, including iwantoneofthose.com, Look Fantastic, MyProtein, Zavvi, and many more. As of 2016, the company operated 100 different e-commerce websites. And the great news is billionaire Matt Moulding still has a 25% stake in the Hut Group, which means he has skin in the game and he is incentivized in order to make the business even more successful than it already is. So that's one tick for management. Okay, so here's some of the company's brands. They've got three sections. They've got beauty, the technology, and their well-being parts of the business. So the well-being part is the part I know. So I know of MyProtein. I use them myself. I'm actually a customer for this business. Exceptional company, exceptional marketing. Before this company even had an IPO, I was actually speaking to a friend of mine who recruits accountants, and he was telling me about the Hut Group, and I was actually asking to potentially invest in that privately. More info on investing into private companies in the VIP group, because believe me, that's when you can get some exceptional deals. So as the great Warren Buffett says, you should always stay in your circle of competence. So understand what you know and what you don't know. And I know MyProtein is an exceptional brand. However, I don't know about all these other brands. Many of them are beauty, skincare brands. I don't know about them. I don't know if they're good brands, bad brands. They seem to have fantastic growth at the moment for the company, but that's the only gap I would say in my knowledge, and I believe also much of your knowledge. But if any of you guys do know about these other skincare brands, the majority of stock investing audiences do seem to be guys. So if there are any girls watching or anybody who has a girlfriend who uses these particular brands, Mama Mio, Look Fantastic Skin Store, Glossy Box, etc., Beauty Expert, are they good brands? Are they bad brands? What's the competition like in that industry? So this business is basically like a conglomerate of online websites, but they also do have a few competitive advantages. So the company is vertically integrated. So they have a service layer, a data layer, and a production and development layer. So the service layer, they have a logistics network, they have fulfillment, they have localized customer service, they have a data layer with data science, data analytics, etc. for tracking all that marketing data online. They also have a production and development layer with manufacturing, their own warehouse, their product development, and an R&D center. Now, here's a headline for you. So work is set to start on the Hut Group's new £1 billion HQ in Manchester after contracts exchange. 1 million square foot HQ, which can support up to 10,000 jobs. So that's going to be a fantastic facility for these guys. The Hut Group actually acquired a major hotel group called the Eclectic Hotel Group, which comprised of two of the UK's most prestigious luxury boutique hotels. That's King Street Townhouse and the Great John Street Hotel. Now, where I am right now in Manchester City Centre, they're actually just 5 minutes walk from me where I am right now. King Street Townhouse is a fantastic place. I've been there before. They've actually got a hot tub / infinity pool on the apartments, which people can use. Extremely Instagrammable place. So people will go there, they'll take a photo, they'll tag themselves on Instagram, which subsequently more people see that and then book more stays in the hotel. Now, the general reason I believe they purchased these hotels originally was so they could run many promotional events in them. They also purchased the 5-star Hale Country Club and Spa, which the company acquired in June 2016. So really their vertical integration is from the brand to the product to the marketing to the sales, everything in one place. They own it all, which is great to see. Now, I did see one potential red flag with these hotels, apart from that they would have been struggling major during 2020. So the founder, Mr. Moulding, will transfer the properties to a company he personally owns, and he will receive £90 million per year in rent. So he has these hotels as part of the group, and now he's transferring them to his personal business. Yet on their investor relations, they still got it there. Now, there is a positive of this. So by him buying the property, it reduces the company debt by £200 million. So that is a good sign to see. Still, it seems quite interesting that he's transferring them from the company to himself personally. Okay, so now let's dive into a few financials for this business. The company has a market cap of $7.57 billion. Their revenues are around $1.3 billion. And that's why we see a price to company sales of around 6. Okay, so total revenue year to date, 1.3 billion. It's up by around 30% approximately. Total operating expenses has also risen by around 100 million, which brings a total operating income loss. So this company is operating at loss. I'd like to know what this increase in operating expenses was. Perhaps that was due to the global health issue. We don't really know at this point in time. So that's quite interesting to see there. However, the great news is if we dive into the cash flow statement, we see this investments in property, plant and equipment, 92 million. They're building this major HQ I mentioned. They have free cash flow, £54 million. Excuse me if I say dollars in this video because I'm always speaking in dollars normally. Now, I've actually created an intrinsic valuation model. I've used this for various companies in the past, Tesla, Google, Facebook. So I'll leave those videos for you guys to check out in the description below. In this video, I'm going to apply it to this company. It's slightly more difficult because with smaller cap companies, there's more unknowns for the company. There's less track record for the company. But still, let's dive in to this valuation. So what I've done here, I've not used the company's cash flow. I've used the company's revenue here. So I've used their revenue of £1.3 billion, which we've seen this year. And I'm assuming I've done 3 different scenarios. So I've got an average case, a best case, and a worst case for the company. So I'm assuming the company grows, let's say 25% per year for the next 5 years in my average case, which is quite, considering the company grew at around 30% this year, and they've averaged around 30% over the past few years. The next 5 to 10 years, I've dropped that to 10% as the company gets larger. They may find it difficult to grow. I know they're doing a lot of acquisitions. They've always been doing a lot of acquisitions. Acquisitions are very, very difficult to truly quantify how much shareholder value they're creating. There have been many studies done, such as one by McKinsey, which basically says acquisitions do not create shareholder value for the company acquiring the other company, which is a little bit disappointing. But still, these guys seem to have made these acquisitions work. That seems to be part of their whole business model. They're acquiring these online businesses and brands. They're developing them. They're introducing them. They're adding them to their vertical integration and marketing and then improving the brand massively. Okay, and then I've also done a best case scenario. So the best case, I've set a 30% growth rate for the next 5 years, which is very, very reasonable, which is basically what they're achieving right now. Next 5 to 10 years, that drops to 15%. Terminal multiple, I've only put a 6 and a 5 on these. That's due to their price to sales, which is currently around that level, UK market. But that's actually a good thing for investors because it means you can actually get better deals if you can find hidden gems. Worst case, I've said the growth rate drops to around 17%, and then the next 5 to 10 years, 10%. Terminal multiple of 4, so price to sales of 4. Let's say there's some bad news around the company. Computing all that together, that gives us a market cap for the company today, a valuation of £12.74 billion. Now, the company's market cap today is £7.57 billion. Okay, so here's a summary for the company. The best case, we could expect to see 157% return. The worst case, 15% minus. Average case, 54% from the current level. And this is an average based on fundamentals over the next 10 years, projecting out for the company. This is not short-term stock movements. The stock could increase by 200% within the next couple of months. It could drop by 50% within the next couple of weeks. It could increase by 100% within the next couple of months again. So to me personally, long story short, the stock does look like a buy right now. My only issue is the beauty side of the business, even though it is growing exceptionally fast. I don't really know it personally. So for me personally, I wouldn't make this a major stake because I don't know the beauty industry. I know more cloud tech, electric vehicle market, etc. I know those industries a lot more than I know the beauty and skincare industry. Overall, if you guys found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead, hit that subscribe button. Turn that notification bell on. If you wish to take things one step further, first link in the description below to be taken to the Patreon page where you can check out the VIP membership group, obtain access to exactly when I'm buying and selling stocks, which stocks I'm buying and selling, and gain access to my entire investment portfolio, the stocks and the story of how I grew that portfolio to where it is today, from just $20,000 to over $200,000. With that being said, I hope you guys have a tremendous day and I'll see you in my next video. Invest safe.